Module Overview. Comprehensive definition and nature of financial management. Financial management is a specialized branch of management that deals with the acquisition, financing, and management of assets with a strategic objective of maximizing shareholder value while ensuring the organization's operational and financial sustainability. It transcends the traditional boundaries of bookkeeping and accounting by incorporating forward-looking decision-making processes, strategic planning, and risk assessment to optimize the use of financial resources. It is an interdisciplinary function that integrates principles from economics, accounting, business strategy, and quantitative methods. Financial management decisions have profound implications on the overall health and direction of an enterprise and require a deep understanding of market dynamics, regulatory frameworks, stakeholder expectations, and the internal capabilities of the organization. Expanded scope and dimensions of financial management. The scope of financial management is vast and multifaceted. It involves financial planning, projecting future financial requirements, assessing current resources, and designing a capital structure that balances debt and equity to meet those needs efficiently. Investment decisions, capital budgeting, analyzing potential investment opportunities ranging from purchase of fixed assets to launching new products, utilizing techniques such as discounted cash flow, DCF, net present value, NPV, internal rate of return, IRR, and profitability index to quantify expected returns and risks. Financing decisions. Identifying the most suitable mix of financing sources, debt, equity, hybrid instruments, that minimizes the overall cost of capital while maintaining financial flexibility and solvency. Dividend decisions. Determining the proportion of earnings to be distributed as dividends versus retained for reinvestment to optimize shareholder returns and future growth potential. Working capital management. Overseeing the management of current assets and liabilities, including cash, inventories, receivables, and payables, to ensure liquidity and operational efficiency without compromising profitability. Risk management. Employing sophisticated financial instruments and strategies, such as derivatives, hedging, insurance, and portfolio diversification, to identify, measure, and mitigate financial risks associated with market volatility, credit exposure, and operational uncertainties. Objectives of financial management, a deeper exploration. Primary objective, maximization of shareholder wealth. This objective emphasizes maximizing the market value of shares and reflects long-term financial health. It goes beyond mere profit maximization by considering the timing, risk, and sustainability of returns. Secondary objectives. These complement the primary goal and include ensuring adequate liquidity for meeting short-term obligations, maintaining solvency and creditworthiness, achieving a balance between risk and profitability, complying with legal, regulatory, and ethical standards, facilitating economic and social responsibilities. Stakeholder considerations. Modern financial management recognizes the interests of a broad set of stakeholders including employees, customers, creditors, government, and the community. Functions and roles in financial management. Financial management is a continuous process encompassing multiple interrelated functions. Financial analysis and control. Regular monitoring of financial performance through ratio analysis, variance analysis, and financial audits to ensure resources are used effectively and goals are met. Budgeting and forecasting, preparing detailed budgets for revenues, expenses, and capital projects, and revising forecasts based on changing internal and external environments. Capital market interactions, engaging with stock exchanges, bond markets, and financial institutions for capital raising and investment purposes while managing investor relations. Cash flow management. Ensuring availability of cash to meet operational needs, debt servicing, and investment opportunities. Strategic financial leadership, providing visionary leadership by aligning financial strategies with corporate mission, navigating economic cycles, and driving innovation and growth. The role and responsibilities of the financial manager. The financial manager holds a pivotal position responsible for formulating and implementing financial policies, evaluating investment proposals with a rigorous risk-return analysis, deciding on the optimal capital structure and dividend payout policy, managing banking relationships and negotiating financing terms, overseeing financial reporting and compliance with statutory regulations, ensuring ethical standards and transparency in all financial dealings, collaborating with other functional managers to support integrated decision-making. Financial environment and its impact. Financial management operates within a complex external environment that shapes decision-making. Capital markets, equity and debt markets where firms raise funds and investors seek returns. Regulatory authorities, bodies such as the Securities and Exchange Commission, SEC, central banks, and tax authorities impose rules affecting financial practices. Economic factors, Inflation, interest rates, economic growth, and exchange rates influence financial costs and returns. Technological advances, innovations in financial technology, fintech, electronic trading, and data analytics transform financial operations. Globalization, cross-border transactions, and multinational operations introduce currency risks, regulatory diversity, and global competition. Emerging trends and challenges, increasing reliance on automation, AI, and blockchain for financial transactions and data security, emphasis on sustainable finance integrating environmental, social, and governance (ESG) criteria, greater focus on corporate governance, ethical investing, and stakeholder accountability, managing the financial implications of digital transformation and disruptive technologies, adapting to evolving regulatory landscapes and geopolitical uncertainties, relationship between financial management and other business functions. Financial management is integrally connected with operations. Financial decisions affect production budgeting and resource allocation. Marketing. Capital investment impacts product launches and market expansion. Human resources. Financial planning influences compensation, benefits, and talent development. Information technology. Investment in IT infrastructure supports financial reporting and analytics. Strategic management. Financial strategies are core to business growth, mergers, and acquisitions. Summary. This module lays a robust foundation by illuminating the expansive and dynamic nature of financial management, highlighting its criticality to organizational success and defining the strategic responsibilities of financial decision-makers in navigating complex financial landscapes.